Welcome back to the Bly Team's YouTube channel. Today, I'm joined by none other than Deb Bly, our team leader, and Mark Elliott with NRL Mortgage. Mark's here to talk to us about some of the interesting things that are going on in the world of mortgages right now. We're going to talk interest rates. We're going to talk about Fed meetings. We're going to get into all the stuff that y'all have as far as questions regarding the mortgage world. So Mark, thanks so much for joining us here today.
Yeah, thanks for having me. It's great to be here.
Definitely. And I kind of want to start off with, you came and presented to our team a couple of weeks ago and you were talking about what you were seeing as far as trends in the marketplace. So can you talk to us about the Fed meeting that happened? What significant event happened on the 12th of June, and sort of what trends are you seeing in the world of mortgages, both conventional and FHA right now?
Right. So kind of what happened on the 12th is we've all been waiting for inflation to start coming down. And unfortunately, we've had a series of reports on inflation, every couple of weeks that is not what we expect. It's higher than expected.
Right.
And that's kind of bad because that's not what we want. We want the economy really needs to slow down inflation so that the Federal Reserve will decide to drop the federal funds rate. And right now we just have a lot of investors out there who are just they're not investing because they don't know what's going to happen.
Right.
So, and to start that train moving. So on the 12th, we got one that, an inflation report that actually looked good. It looked like it was coming down, and it was as expected, which is a great thing. And so the very next day, the Fed did not lower interest rates, but we knew that was going to happen. But they also didn't raise them, which was something they were talking about doing. So the net effect is that the market looked better.
Sure.
Out of it. So.
Well, and talking about the federal funds rate, I've heard you mention this before, and I think this is a conventional sort of, people think this is a certain way, but it may not be exactly as easy as certain people think. The federal funds rate, when it comes down, mortgage rates come down, right? But you said it's correlated, but it's not an exact science. Can you explain that a little bit?
Sure. So what you hear on the news, when the Fed drops rates, they're not dropping rates on car loans and mortgages and credit cards and all that, but it is related. And really what they're doing is that's the rate at which banks are borrowing money from the Federal Reserve. It's overnight loans. And when the rates are lower, then businesses get more loans. They expand, they buy machinery, they hire people, they do all of those things, which gets the economy moving and
Right.
gets the economy going, which is what, ironically, we're kind of trying to slow that down right now to a manageable level. So, it's related, but it's not exactly point for point.
Yeah.
So.
And Deb, I know you're working with a lot of buyers right now that, interest rates have been a concern. What sort of conversations are you having with buyers that you're working with, Mark? Maybe you have a shared client, something that, you're reminding them right now as they're going through this buying process that they've chosen to purchase a home in this sort of environment.
Yeah, I think right now, and I think Mark will agree, right? And I think the real estate in general understands that once those interest rates drop down, we're going to see much of what we saw happening a couple of years ago when we had this influx of buyers in the market, which I think once interest rates come down, there are a number of buyers that have been holding off, right? So once those interest rates come down and we have that influx coming into the market, I think we all know what's going to happen there, right? So you were patiently waiting for the interest rates to come down, but now your home price has gone up. And while we're on that topic, Mark, I think, why don't you talk, kind of to the buyer out there that change in interest rate from, let's just say, 0.25%. What does that really make up as far as the actual house payment?
Might be $50,
Right.
a month. I mean, it's real money for sure, but you're always battling, how low do rates get before the floodgates open?
Right.
They say there's 5 million buyers out there ready to buy a house that aren't buying right now. There's not 5 million houses nationwide on the market. So it's going to be a supply and demand situation. Generally, that's the number. We hear 7%, quite a bit, 5%,
5%
sometimes, but it's more towards the 7%, which is, that's a considerable amount.
Yeah. Well, Deb and I were at the League City Chamber of Commerce event yesterday, and they were talking about how League City specifically is a city of 120-something thousand.
Right.
And in the next 10 years, there's 140,000 people moving to League City. So we're going to more than double in a decade in size. So you have to think that all of those people have to be housed somewhere. And there's no way that prices could really take a sharp fall if you're going to have this influx of people, which Texas, a lot of parts of the country are benefiting from an influx of new residents, but Texas and then our area specifically is certainly no exception to that.
Yeah, absolutely. And, really the reality is the rental market, we're shopping for an apartment for my daughter right now. And I mean, it's staggering what it costs to rent a place. And you can almost guarantee that's going to go up every year, And so, if you buy a house now at, $300,000 or $250,000 or whatever it is, that house increases in value. 2 years from now, you can't go back and negotiate the price of the house, but you can always refinance your rate and drop your payment.
And that's such a great point too. And that's what I've said to my clients. If you have the money set aside for a down payment and you can afford the monthly payment, it fits within your comfortability level and you like the house, there's no reason not to buy, because you're going to build equity in the time that you own the house till the quote unquote rate drop happens. But if people always say if you ask a real estate agent or you ask a mortgage lender, they're always going to tell you right now is a good time to buy a house. But how mathematically are you walking through the conversation with some of your clients about, somebody says to you, hey, Mark, thanks, I want to use you for a loan, but I'm going to wait till the rates come back down. How are you walking through that process to get them over the hump and realize that it probably is beneficial to buy now rather than to wait and sit on the sidelines?
Right. So, first question I always ask is, well, what rate are you looking for?
Right.
If you're looking for 3%, you're going to be looking a really long time, because we don't expect it to ever get back to that point. It was a great time while it lasted, but I'm sorry, it's just not coming back. We're going to see rates likely in the 5s, maybe the high 4s. And so, but reality is right now, you're at 6.5 or so on a 30-year fixed rate mortgage. Yeah. If it drops at a point, then that's $200 a month. It's good. It's good money, but at the same time, that value of that house is going up. You're gaining equity. You're getting the tax deductibility of the interest. You get to deduct your property taxes. I mean, all of those things that come along with homeownership, besides the very real thing that, hey, if you've got a young family and you're moving around again and again and again looking for cheaper rent, as opposed to having a backyard for the kids to play in, neighborhood kids to all grow up with, those are invaluables that you can't really, they're intangibles that you can't quantify.
Right. And Deb, are you seeing kind of those same conversations with your clients as well?
Yeah, 100%. And Stephen, as we've been doing the video shoots and everything at all these new home constructions, I know we've talked about it and you've seen it too. The new home builders out there are certainly gearing up for the interest rate coming down, because we're seeing more inventory homes on the market, or more inventory homes coming into the build than we've seen in many, 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 many years. Many, many, many years. I don't think I've seen this many inventory homes slated to go be built as I saw since back in 2007, 2008.
Yeah, it certainly seems like they're gearing up for something, and those builders do extensive research on market trends and what's happening. So if you start to see them building out a ton of inventory, it probably signals that things are moving in the right direction. Right. Mark, you mentioned a program that there is for like clients wanting to list their home, and a lot of people. So, and I'm sure Deb, you've gotten this even more than me, but the term loan assumption has come up 100 times in the last 6 months for me. And that's a very difficult thing to do. It can sometimes be a lengthy process. But Mark, you mentioned to me the other day something that NRL has that allows you as a seller to basically buy down the interest rate for the buyer, and it's a seller concession. Do I have that right? Yeah. And can you explain it a little bit?
Yeah, so we call it list and lock. And really the idea is that, if a builder, builders have rate specials all the time. And an individual seller of their home, is competing against that. Right. And so one way that we help them do that is we use the list and lock program. So if the market rate is, 6.5, we have a program where maybe they can buy that down to 5. And so now their house is at 5%, where the house down the street, somebody's got to get 6%, 6.5% to qualify. And so that makes the house more attractive to the buyer. If you could say 123 Main Street is at 5%, but 128 Main Street's at 6.5, which one are you going to go buy?
And in this climate, we're seeing a lot of seller contributions anyways. So what better way
Absolutely.
to contribute than to buy down your potential buyer's interest rate when everybody's, hearing the term loan assumption and wanting to know how they can get one.
Right.
This is a better tool to me because it seems easier and cleaner than, those loan assumptions. Can you talk about that? And does that take a long time? I hear it takes a
So-
long time to do that.
So if you think, first of all, loan assumption, one of the challenges is, let's say that, somebody out, they want $300,000 for their house and they owe $200,000. Well, somebody has to pay that $100,000 difference. The buyer has to pay that $100,000 difference to assume the loan. So let's say that's not a problem, but then you have to get it approved with the lender. And they don't do a lot of loan assumptions.
Right.
So they probably have a couple people working in that department, and now they're getting, 1,000 phone calls a month to these two people that used to do maybe one assumption, two assumptions a month. Now you've got thousands of people trying to get it done. They're backed up. So we've seen it take 90 days, 120 days just to get the assumption approved. And then sometimes, if you don't do your homework, that buyer can't even qualify anyway.
Yeah.
And so you've wasted all that time. And that's, something else to talk about here is we've mentioned, getting into a house now, and there's programs, and there's down payment assistance programs out there. They don't have to necessarily have their down payment saved, or they can get a gift from a relative. I mean, there's innumerable ways to purchase a home even if you haven't saved a bunch of money on the side.
Right.
And people are often surprised what they qualify for, without having a bunch of money in the bank, not making a bunch of money monthly. And so it's always good to take a look and see.
Yeah, and the general misconception, I'm sure, Deb, you hear this all the time, is, well, I can't buy a house because I don't have 20% of the purchase price. And a lot of people think that you have to have 20% of a purchase price as your down payment for a home. Maybe you can talk a little bit about FHA, VA, what the actual minimum down payment for conventional mortgage is, and so on and so
Right.
forth.
Yeah, absolutely. FHA, it's 3.5%, 3.5% of your purchase price. And again, there's innumerable down payment assistance programs to pay that, and grants that are out there. Conventional has a program. If you're a first-time home buyer, it's 3% down. If you're under certain income levels, then you can put 3% down and buy a house. And VA and USDA, for that matter, are zero down.
Yeah.
You're just paying your closing costs, and that's it. And you can, we hear all the time that it's a percentage of the purchase price and all. And in some states it is. Some states it does vary by the loan amount or the purchase price of the house, because all kinds of different factors. But it's pretty basic here in Texas. If it's $500 to appraise a $50,000 house, it's $500,000 or $500 to appraise a $500,000 house. So it doesn't really matter. So I always tell people it's about $4,500 plus the first year of insurance and 3 months of taxes and insurance. So it ends up being a whole lot less than people. And your seller can often pay up to 6% of the price in seller contributions. So a lot of those get covered by that anyway. And that's just it. I mean, you can get more contributions that are actually closing costs, and then you can't use it. So if closing costs turn out to be 2%, you get 6% in seller contributions. You're just going to give that 4% right back to the seller. So you always want to work with your lender and make sure that you know where you're at on closing costs and what you need, and to structure that deal.
Absolutely. And what are you all seeing generally as far as the average contributions to closing from a seller percentage-wise? Do you know?
We have a pretty large mortgage group, and so we do a lot of loans. And so, we see $5,000, $7,500, and often it does depend on the price of the house, right? That's always a percentage, the seller contribution. So, but we're seeing 3%, we're seeing 4%. And if there's extra contributions, then often we just use that to buy the rate down anyway.
Right.
And if the seller's already agreed to it, why not?
Sure. Two things that come up. Mm-hmm. I don't want to get pre-approved for a mortgage because I don't want my credit score to go down.
Right.
And I just want to look at houses. I don't know why I need to be pre-approved for a mortgage right now. Can you talk about both of those things, and why, if you're beginning the home buying process, getting pre-approved for a mortgage with somebody like yourself is a good idea?
Well, it's first thing is most mortgage companies, or a lot of mortgage companies, including us, will do a soft credit pull. Mm-hmm. So we're not going to do a hard inquiry that drags your score down, that puts And those hard inquiries also trigger, innumerable mortgage companies to call you the next day.
Yep.
And so, we do the soft pull, take a look at kind of what we're looking at. And often, we always look at it as either now or maybe now, but here's what you could do to get yourself in a better position. Or, hey, maybe not now, but here's what you can do to get yourself in a position to buy.
Right.
I don't do credit repair, but I've been doing this for, as my teenager says, a quarter of a century. So, I've seen a lot of credit reports, and I can advise people, yeah, if you do this, this, and this, then your score would be better and you'd get a rate that's, a quarter point cheaper. And often it's something, I've seen it be something really simple, and they just make a phone call, they do what they need to do, and all of a sudden this credit score goes up 40 points.
Yeah.
It's amazing. So, they kind of are used interchangeably in the market, I think. But reality is the pre-qualification is, we've looked at their credit. They've told us what they make. They've told us, what they have in the bank. Yeah, they may have given us some preliminary documentation, but we haven't sent it to an underwriter. Now, if you've got somebody who's got a 800 credit score and 50% down, you can pretty easily see that guy's going to get approved and we're good. But, some of that's something like borderline, you don't want to run it through an automated system. You want to, and ultimately a pre-approval is you send it to the underwriter and the underwriter underwrites that borrower and get them approved, get them clear to close. And then the last piece is I need a house and a survey and a title commitment.
Yeah.
And that's the kind of buyer we want to set up for success because they can close in a couple of weeks, whereas everybody else is still stuck at finding a lender.
Exactly.
And so it's a 30-day process for them. So their offer looks more attractive. And we're seeing appraisals back in 5 to 7 days anyway. So, but as everybody gets busier, that timeline will extend.
Yes. There's only so many appraisers out there.
That's
It's a busier time for everybody. Underwriters, processors, title companies,
so your
surveys.
5 to 7 days may no longer be 5 to 7 days.
They no longer be 5 to 7 days. We saw it, in 21 and 20, certainly, that it just went bananas. And everything took a little longer.
Well, cool. Well, I think, Mark, that pretty much wraps it up. I appreciate you being here today. Can you just look into the camera and let everybody know where they can find you and if they want to get pre-approved or have questions, how they can get a hold of you?
Sure. So, again, I'm Mark Elliott with NRL Mortgage. You can call me, 281-687-5095, or I try to make our website the easiest possible. It's just markdoesloans.com. So go to Mark with a C, but I also bought Mark with a K. So even if you spell it wrong, you're in good shape. So markdoesloans.com.
Smart. And guys, Mark is our preferred lender here with the Bly team. We work hand in hand on many deals. So if you're in the Houston area or you have questions about buying a property, we'd love to help you. We'd love to refer you to Mark. And thank you for watching this episode. Make sure you hit subscribe on the button underneath. Drop a like and leave us a comment. Let us know what your favorite part of the conversation was today. Thanks, and we'll see you next time.